Hey traders, this is Christian from Hertz with Tribeca Trade Group with a quick video on the monthly review of ETF fund flows. So basically where the money went to in all of May, since it's now going to be June 1st. It's always good to take a look back and see where the money went for the month. And if you're a tape reader like me, you can definitely make some conclusions or draw some conclusions about, when you see trades go up on the tape based on how they went up, or if they went up aggressively, if they were swept, whether or not they were bought or sold. Why I look at ETF fund flows, because this is the evidence. When I used to trade ETFs on an institutional desk, I used to be in the seat of doing creations and redemptions from market making activity. So the outflows that you can the inflows and outflows that you can track are buying and selling. There's nothing more pure to that, and there's nothing that is 100% proof of actual buying and selling than watching money go into these ETFs. It's tracked. You could track it on Bloomberg. You could track it in several other places. So that is why I track the fund flows, because you could see exactly where the money went. The other place sometimes that you could see where money went is 13Fs, but those are old. By the time that you see that, it's basically a quarter old for where money went to. This you could see exactly where. And as ETFs get more and more popular, which they've grown exponentially over the last 5 years, it's really a good gauge of where money is flowing into. So that's a quick summary of why I look at this. Now let's get into the heart of the data. So what was particularly interesting in May was that international equities, they stole the show. They saw inflows of $21.6 billion. Again, that's just equities, and that's international. So I'm going to get into where that was distributed. But if you look at the U.S. for most of the month, there was basically outflows. There was 1 week of inflows, and that was the last week of May, but they totaled $3.1 billion of outflows in May. So all the money that was being distributed into equities went into international areas. Fixed income ETFs, they actually saw $9.7 billion, so some pretty good money going over into fixed income. Not as what you would think from probably just looking at the headline number and saying, oh, they went into treasuries. The money actually didn't go all into treasury ETFs. Investment grade bonds, LQD, actually saw the biggest inflow of any fixed income ETF. So I'll drill into some of those numbers. But first things first, international, where the money went to. Developed markets. So first of all, what are developed markets? And a lot of people see this ETF. I know a lot of traders see it and they're like, what the hell is EFA? EFA is basically developed markets. So they are Europe, Japan, Australia. So a lot of different countries. We can actually look at this on Bloomberg, and I could show you EFA. And if you look at the distribution, you could see that Nestle, Roche, Novartis, HSBC, Toyota. So pretty diverse basket of companies here. And you can see it's 22% Japan, but when you break it by country, you got the UK, which is 15.5%. You got France, Germany, Switzerland, Australia, Netherlands, Spain, Hong Kong, Sweden. So a pretty diverse basket of countries in this ETF. And if we look to see, and I'll give this graphical depiction of this, on the bottom of the screen, you can actually see day by day the inflows, and you could see this really pick up right around the end of 2016, but mostly in May. Really some large inflows. So EFA was the biggest inflow. I'll go to my spreadsheet and show you how I compute this, which you don't need to see all the columns here. So let me just wipe this out or hide this, and you could see that that EFA. So if you just concentrate on this side of the screen. There we go. This is actually not 5-day. This is monthly. So sorry for this is kind of showing you behind the scenes, but this is sorted by 1,700 different ETFs, and you could see EFA far and away $4 billion that went into this particular ETF. You could actually see besides this particular one, you could see IEFA that added $1.8 billion last month. And also VEA, also 1.7. So these three ETFs, VEA, IEFA, and by far and away it was EFA adding $4 billion. And you can see this is the fund size and how much they grew. So EFA grew by basically about 6%. So the fund actually grew in size by 6% just in May. If we go to EFA, it's 7.5%, and if we go to VEA, it's 3.4%. So again, this is sizable stuff here that happened in May. So going back to my report. Besides that, so again, $8.6 billion, really a lot of that money went there. Emerging markets, also $5.7 billion. These kind of have been flip-flopping every month. It's been going back and forth between emerging markets and international developed markets. This particular month, May, it was developed markets that won out and emerging markets were second. Third, which is pretty interesting, because when you add this to developed markets, because as I just went through, some of these developed market ETFs have a lot of Europe in them. So when you couple that with specific European ETFs and Eurozone ETFs, $4.7 billion. You can see Germany's on the list. When you throw that together, it's $5.2 billion, and it's even more money that went into Europe in the month of May. So really some big inflows. And if we take a look at where the funds that made up these, it was EZU that saw the biggest inflow. And you could see all these green bars. Again, this is all money going into the ETF. And obviously you could see the outperformance as money started to come in. VGK was another fund. Actually, I'm sorry, VGK actually saw more inflows than EZU last month, but you could see all these green bars. Notice that this is a new trend. We haven't really seen this for, as far as I'm going back here, which is 1 year. We go back 2 years, and I don't think it's much different here. Some inflows back here, but really, this has been basically a desert for about a year and a half in terms of activity. More outflows, these red bars, happened in 2016 than anything else. But so this is a brand new trend of money being, basically essentially pouring into. Fez is another ETF, same exact trend. So all three of these ETFs, we can go back to EZU for a minute, but all three of these ETFs, you look at the right of the screen and you could see EZU is a little bit different. I mean, you could see all the outflows, in fact, in 2016. This one saw the most outflows of any of the European ETFs, but it's basically all the same trend here, and it's really happened very quickly. So again, look at Fez, and it's more dramatic, and you can see this gap up and the money going in here. So and this is just pure volume. So you could see all this volume, which I've got the fund flows zoomed in here a little bit, or broadened out here, but you could see that it's one and the same volume. What happens is the creations happen usually the day after the volume, so you could see how the big volume and how the flows kind of catch up, the fund flows, inflows catch up with the volume a couple days after. So, what did Europe do basically in May? It certainly outperformed. I should have European. Yeah, the performance of VGK was plus 4.9% in May versus SPY up 1.4. So, the money does push up performance. There's no doubt about that. We already talked about the distribution there. Besides that, Brazil, this was actually after the big drop in Brazilian equities. EWZ was mostly responsible for the inflows going into Brazil. Besides that, there was a few countries that saw outflows. So I guess you want to pair this. Latin America is basically the ILF ETF, which Brazil does have a big chunk of those ETFs. So if you kind of pair that with Brazil, still net inflows for the month after that, after Brazil really took a hit on some major headlines that happened a couple weeks ago. Sorry about that. Canada also saw some outflows, as well as the UK. So light outflows compared to the colossal inflows that these regions saw. Turning to the U.S., what caused the $3.1 billion of outflows? A lot of it was in small caps. Take a look at the biggest flows by ETF, which we already talked about this side, but take a look at IWM, $4.3 billion. And, IWM, small caps really drastically underperformed in May. They were down. They fell 2% versus large caps. Large caps up by 3.4%. So Excuse me, that's 1 point. That's wrong. That's 1.4%. So wow, found two typos in there. So that those outflows and money coming out, the selling pressure really contributed to the underperformance in small caps in May. And if we bring this up, and you can kind of see the visualization of this. Basically, a lot of the outflows occurred in the first, maybe not so much the last week of May. Let me just draw this into 1 year. So basically, in about the second and third week, I would say, of May, a lot of those outflows occurred. Just as we kind of started to break down a bit in the IWM ETF. Other than that, sectors that saw just a heavy hit of outflows were GDX. Take a look at those. I think this was actually the largest outflow of GDX ever. So money really coming out of the gold miners. Same thing with GDXJ. GDXJ, not so much. It was really GDX that saw the lion's share of the outflows. And again, you could take a look at that and some really large outflows, and you could see the performance, kind of moved down, but not crazy moved down. But it just looks like people are really got out of GDX, despite gold actually getting above the 200-day moving average. So if you look at GLD, you can see GLD has been pretty quiet in terms of flows. There really just hasn't been a lot of money going into or out of the gold ETF. But you can see gold is above the 200-day moving average a bit. But nevertheless, it looks like the equity guys in the space kind of ran for the hills in May and got out of this particular group. And then no surprise here, I think financials saw a lot of outflows as well. $1.2 billion. Most of that was just in XLF and KRE. Two of the largest financial ETFs. XLF, $754 million came out. XLF is a really large fund, so I don't think that's, we'll look at the fund size, but you could see even for the month, if I kind of bring this up a little bit further, you could see that there was a couple days where XLF had some decent outflows with one particular day back on 5/17. But all in all, you can look back in November and see how much inflows actually drove this up. But yeah, so money's starting to come out of financials. If we go to my spreadsheet and just go back to XLF just to kind of show you how big that outflow was. In terms of the overall fund size, 3.3%, so not huge. KRE, which is up here. Where is KRE? KRE was a little bit bigger. Almost 10% of the fund was withdrawn. And we'll bring up KRE over here. And you could see that's actually been seeing decent outflows, kind of back and forth for March and May and April, but definitely more outflows in May as this has kind of been going down. We'll see if it holds the 200-day moving average. Same thing with XLF, which is now underneath the 100-day moving average. So that is basically it for the May review of fund flows. Fixed income, I'll just talk about for 2 seconds. $9.7 billion went into May, but it was pretty spread out. LQD was the biggest. And then after that, there was only one fund that was treasuries. Out of the next three biggest inflows, it was also aggregate bonds, which is basically everything, and emerging market bonds also saw and has been seeing a lot of inflows. If we go to this particular chart and we could look at the fund flows here, and you could basically see since November, if you remember, this big outflows happened right after the election. People really didn't like what was going on and in emerging markets with the stronger dollar and got out quickly. But look at all the money coming back in here. Basically since February, the money has really started to go back in here, and the nice trend since this broke the 200-day moving average. You had one retest, and since then it's been up and away. Basically for emerging market bonds, nice yield in this ETF, about 4% as well. So those inflows were spread out. Like I said, IEI saw $680 million. That's 3 to 7 year bonds. But the inflows were pretty spread out in fixed income. So that's it. That's the review for May. A little bit different. If you follow me on Twitter, at @CFromHertz is my Twitter handle. What I've been talking about for the last week was this trend of money going out of the U.S. and into international kind of stopped for the last week of May. I think it was actually about $8 billion that went into the U.S. over the last week. So a little bit of a trend change. We'll see if it continues into June. So again, I put out those reports. Our subscribers get this same exact newsletter, same exact review, just as a weekly review, and I go into a little bit more detail in the weekly review. So if you're not a member of Tribeca Trade Group, check us out, tribecatradegroup.com. You know, you can get half off the first month. We run an all-day trading room as well, but you know, just the value of getting this information alone. So even if you're a part-time trader and can't be in the trading room all day long, just the value of getting this information, I think is worth it. So tribecatradegroup.com. Thanks for watching the video and have a great evening.